Good afternoon. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's recap and look ahead. It is Thursday, the day before the jobs report, the day the S&P cash has the tightest range we've seen in a long time. So hopefully it gives way to some kind of extended move, more than just a day or a day and a quarter, or more than just a day, then open up down the next day, then open up the next day, and then really just wishy-washy everyone into bits and smithereens. But, again, underneath the surface, there is some things that have continuity and have been moving. So you just can't be in some of the indices or just select groups. Let's just get right into it. So here's the S&P cash. Okay, here is the S&P cash where everyone in the world looks. Here is your post-Brexit move. Okay, here is your commitment to that. And look at the tight range we had into this jobs report. And this jobs report was a hot one, if you remember. And then we broke out above the high and had a nice move. Okay, and then from here, basically, you had your break of the summer range, which was very monotonous and not a lot of fun. Came in, retested this spot, got tight before the Fed, came back up. Now here we are tight once again. So I guess we'll see what happens tomorrow. All in all, support's been holding. This 2145-ish area has been big-time support, and resistance has been 2165 to 2175. So we'll see if, I don't know if the market wants a really strong jobs report and, rates to go up, but I guess who knows? A quarter point's a quarter point. As long as the banks continue to hold up and tech holds up, and and oil doesn't go down the way gold did or the miners did, maybe it'll be helpful. We'll see. We'll see tomorrow. The Qs, closed pretty much in line right near highs, looking like it's could break out to all-time highs, and you could be looking at headlines tomorrow saying strong jobs report, economy is doing good, new highs in all-time highs in technology, or it could be like okay. Market down a lot, jobs report means Fed's going to raise rates, market doesn't like it, and it gets hit. So we'll see what happens here tomorrow. XLE still more of a tailwind these days versus a headwind. When did it become a tailwind? Right here, when it took back the moving averages and held right there. Now we'll see if it can go higher than this. The banks became a tailwind also. JP Morgan, really set up, macro-wise, this pattern is looking as if you're at a very key level here, so it kind of thinks probably that, actually, here's one descending trend line that got broken. Here is where it held, and now it's looking like it's going to make weekly, monthly highs, and maybe you can get back to the spot if they want to keep the banks going. Morgan Stanley, also held up even when they said it did some things Wells Fargo did. Here was, I guess, one spot when it took back the 200-day, held above it, and now it's, looking pretty good, looking like it's above the 8-day, above the 21-day, hanging in there. We'll see. Then you have Bank of America, just had a big move. Talked about this in the note also. Here is your descending channel, held above it, and now it's back to weekly highs. Hard to chase it here because if the number's a little cool, it's going to come in, and then we'll see what the story is there. Metals, had more downside follow-through. The GDX. I'm not going to get into this whole friggin' anatomy of the trade again, but here is when the intermediate trend line failed. Here is when you were supposed to have a hot jobs report and it was cold, and boom, okay, came in, came back up, then retested here again, created that right shoulder of the head and shoulders top, and then broke the neckline, below the 8 and 21 day, people got complacent, and then pow. Now we'll see what does it do with the 200-day rule. Sometimes the 200-day is, a trap. But, if you didn't sell it here or in here, it's hard to sell it down there. So you'll see, does it stay below this for a few more sessions and really turn into a macro short or a sell? Or does it come back above and that was your trap? We shall see. GLD did the same thing. Closed below the 200-day, but this is not the day to short it. Okay, it already filled this gap. It's already, broke this channel. But I wouldn't say it's a buy, but I'm just saying, if you haven't shorted it in front of a jobs report, if it happens to be a cooler one, not a hotter one, you can get some kind of bounce, look how far it's extended from the moving averages. All in all, though, it's been a good avoid. Every time we've come in here, we've talked about the vulnerability of the metals and the miners. Now let's go into stocks. All right, stocks, today we came in, the news was Twitter wasn't getting taken over, that Google's not putting a bid in, Apple's not putting a bid in. First, let's get to Google. Didn't really do much. Still tight. I don't know what the freak this thing's waiting for. Here is the gap above the channel here after earnings, and it's wedging real tight. I don't know. Maybe it's too capital intensive. Maybe they know earnings aren't going to be great. I don't know. Or maybe they just want to wait until they just take it. So I guess when they just take it, it'll trade huge volume above 808. Until then, it's been a choppy mess. What hasn't been a choppy mess is Amazon. Amazon's been working its way higher, and I remember when I bought Amazon here, right when it cleared this pivot here of 790. I think I sold it into like 810, and that's when I started trading Google. And now Google's at 803, 7 points lower, and this is 30 points higher. Go figure. Anyway, here's your 8-day. That's support. We'll see what happens here tomorrow. Apple was a good focus today. Wasn't easy. All in all, to me, this chart looks the best. Okay, you have a nice consolidation here. It looks like it's poking its head above it. It would be nice if something worked that looked like good on the chart, where you're above the 21-day, you're above the 8-day. You just consolidated a big move. So you would think that if something wanted to go higher, this would take this spot out at some point. But again, this market, makes you sell it when it looks good, makes you buy it when it looks bad. So hopefully that changes a little bit. We'll see. I am long that. I'm long a little Facebook also, for the mere fact that it's tight. We'll see. Hopefully this wedge breaks to the upside versus the downside. So I'm in some. And if it happens to show some big volume and the market wants to have a good day tomorrow, I will be adding above 129.30 for a move. They seem to have brushed off the video metrics scenario that caught me on a Friday not too long ago. I think I was long it here, and then that happened, and now it's kind of rebuilt again. We'll see what happens there. Twitter, I sent out a tweet yesterday saying, now's not the time to get excited. It's 17 in June when it crossed the downtrend, the LinkedIn got taken over. That was the time to buy some calls. So I said, let's sell half. Sold half yesterday. Obviously, it would have been great to sell them all, but is what it is. Sold half, and I didn't buy back anything yet today. I traded the stock a few times, but I didn't buy the options back. I'm going to wait a little while longer. I figured they're going to try and close it somewhere around par, for options. But to me, I was just hoping maybe a little bit more downside. So I sold the leftovers today for peanuts. I had the 25s that I sold for like 38 cents, and I also had the 20s that I sold for $1 and change. So a little bit lower, and I figure I'll buy the November 20s, and maybe it gets back to 25. Here at 25, no one was buying it at 28, so now back below 20, maybe there's talk of 22 to 25 again. So you got to buy the dips here and play the extremes. Otherwise, it's not worth it. New issue land. This coop was decent off the start, and then it just gave way real hard. Not the easiest new issue now. This doesn't tell you to do anything into tomorrow. Okay, didn't close on highs, didn't close on lows. Big range that's just needs to consolidate. This Twilio, definitely can close to an opportunity. It's come a long way. This was one breakout. Here was another breakout, and now it's trying to hang in here. Okay, I would say, maybe it needs to come closer. Maybe it wants to see how ACIA prices its deal. But at this point, here is their upper support that broke. That was your high-level break and stayed halfway in it, and now closing on the lows. So we'll see what happens here tomorrow. Usually when you want it to open down, you have to buy 20%. So we'll see. But there's still trades, even if they're not making new highs. Like yesterday, we talked about TTD as a red dog reversal. We played it for a breakout. It got crushed. A lot of people sold out, and then you had that viable pivot. Well, today you had a day-and-a-half trade, not from the high end of the range, the low end of the range. So here was your TTD. Not a great-looking chart, but remember we traded it here, and wound up making good money. Had a third left and sold it when it broke the high-level resistance. Which became support, and then down here you could add a nice little red dog reversal. Boom. Came below this, came back above it. Could have held some, a third, and came right into resistance. So day-and-a-half trade, and different than this day-and-a-half trade. But these are all tactics that you can learn and use. What did some other ones do? What did PI do? I think it also off the lows. No, actually, this PI kind of hanging in there. We'll see what happens. Going across, still hanging in there. Still looks okay. Could continue. LN still hanging in there. LN still looks constructive for a new issue. I didn't take it long, but you had a nice long here, another nice long there, and then came a little bit below, which it always does, and hanging in there. So maybe this is building a new base to go again. The Nikkei was up 4 days in a row, so sometimes it's a little bit trickier, after 4 days, but this does look like it's hanging in. And that's a story. So, the range is tight. The bulls and the bears both have, I think, a good argument on why we're going to break to the upside or the downside. Stock movement has been very selective. It's been, pretty hard. Like, look at Tesla. Tesla came back in the game, on that gap up Monday, and then Goldman Sachs friggin' downgraded it, and this potential constructive little gap up turned into broken again. It was still below all the moving averages, but just unfortunate. Gap up, held here. At least this one closed on the lows. If it would have closed on the highs, everyone would have been trapped. Instead of closing the lows, at least I don't think some guys were trapped into this move. So now it's back to broken again. Netflix, which also on that Monday woke up, it acted better, right? It woke up here, held, went again, and now we'll see if it can hold this and see what happens next. Lastly, BABA looks kind of good too, where it's perked up yesterday, came in a little bit, went sideways, building a new base up here, and we'll see if this breaks to the upside at some point. Last time it looked like this, came in, perked its head up, and made a new high. So we'll see if that continues. This trend above the 21-day has been strong, and that's about it. I'll be in short L's tomorrow, so I won't be doing the morning call, but I will definitely tweet some levels, and I'll be on the VTF over there, and we'll figure out what's next. ACAI is pricing its secondary. We'll see what happens. It was, near this 100 before they announced their earnings, so we'll see where they price it. If they price it like, right around 108, 109, it probably is up big. If they price it between 98 and 102, maybe it goes down to 104, 105, and then there could be some good trading around it tomorrow. But we shall see. We'll have to wait for that. Have a good night. See you tomorrow.